Good evening, ladies and gentlemen. I'd like to welcome you to yet another weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited. Joining us today is Percival Braham, Investment Advisor and frequent contributor to the panel. Today we'll be discussing Tropical Battery Company Limited and NCB Financial Group Limited. Be sure to stick around to the end of the program for our special segment where Percival will be sharing with you some invaluable investment advice. Before we get started, we do want to remind you if you're looking to expand your portfolio or embark on your very first investment journey, Mayberry can place you on track to financial freedom. So be sure to follow us on social media to learn more. Now it's about time we get into the meat of the matter, and for today's discussions, we want to start off first with Tropical Battery Limited, which will be presented by Percival. Welcome, Percival.
Thank you, Dan. This evening, we'll be taking a look at the financial highlights for the 6 months period ended March 2022 for Tropical Battery. Now, coming out of the pandemic, Tropical Battery has been one of those companies on the junior market that has been performing very well. The first quarter ended December 31st, 2021, was a quarter in which the company recorded their highest revenue, highest operating income, operating profit, and highest net income. Following from the first quarter, we see where the results for Tropical Battery have been very good for the second quarter. There has been a 40% increase in revenue, closing revenue at $1.3 billion, moving from $927 million for the same period for March 2021. Gross profit has also increased by 38%, and we also see where net income has increased by 151%, and earnings per share has moved from 3 cents to 7 cents. That's a change of 151%. The company's shareholders' equity was also tabulated to be $886.5 million. The company's current share price is $2.63, and the PE ratio is 24.35 times the market. We'll now take a look at the company's quarterly profit performance. Specifically, I'll be looking at Q1 and Q2 for the last 2 financial years. So for Q1 2021, we see where the company recorded profits of $56.6 million, similar to that recorded and reported for Q1 in 2022. However, looking at Q2, in 2021, the company recorded profits of $15.5 million. But for Q2 for the financial year 2022, that has increased over 90% to $29.98 million. The leadership of the company has communicated recently that given the trajectory that the company has been on since the start of the financial year, it is anticipated that they will exceed their targets for the financial year. In my view, the company is well on the way to achieving this target, specifically because they have taken steps to intensify their efforts to tap into the renewable energy market. This specifically being done through Tropical Mobility Limited, and the company also recently launched Tropical Energy Limited and Tropical Finance Limited, 2 entities created to serve the needs of the renewable energy market. The company has also formed a partnership with the largest distributor of lithium-ion batteries in North America. And with the partnership that has been formed, we know that the company will be moving rapidly to serve the needs of the electronic vehicle market, which is increasing in Jamaica. So that, coupled with the business that the company has already been doing, they have now diversified their reach, and we do anticipate that, as projected, the company will be exceeding their targets for the financial year. So as we look at the stock price history, we see that during the pandemic period, the growth of the stock has been stagnated. However, coming out of that period, we see where the stock moved from a low of $1.15 in May of last year, closing at May 17th this year at $2.63. And it is my view that the company still has a far way to go, even as it has diversified its offerings to the market. So we do anticipate rather, that the stock price will matriculate further.
Thanks, Percival. Great company run by a great family. Big up Xander and the Melvilles. You guys are doing a great job. This one is, I think, the Mayberry mantra of slow and steady wins the race. IPOing about 2 years at $1. We now see it up 150% to about $2.63. It's trading a little rich to the market PE average of about 18, 19 times, but we see very strong earnings in recent quarters. In fact, them earning more in this half-year period than they earned in their first 2 financial years being on the stock market. So great to see this profit growth. The market's obviously anticipating even further growth. I think the stock price is about fairly valued just now. They're going to have to keep growing. We see great potential, as you highlighted, the lithium ion space in particular. So I think this is a good stock to have in your portfolio. I personally wouldn't be running to buy at 260, but I'm in love having bought at $1. And I think these guys are going to do greater and better things for the future. So congrats, guys. Keep up the good work. Next up, we're going to look at NCB Financial Group. So we want to look at the 6-month results, March 2022 for NCB Financial Group, and it's great to see them bouncing back strong with net interest income up by 19% to $32 billion, underwriting income up 14% to $63.5 billion, the operating expenses being fairly contained at 10%, up to $51.7 billion, and this results in them making a net profit after tax of $15.2 billion, up 65% from the prior period. Earnings per share now up to $4.23. That's a 77% increase. And the net profit attributable to shareholders, $10 billion. So important to note, while the headline profit is $15 billion, the profit attributable to shareholders is about $10.4 billion, taking note of the fact that significant earnings are coming from Guardian's holding group, of which they own approximately 62%. So there's a pretty large non-controlling interest that we need to look at. What I like about NCB is today at stock price of $110. This is half of where it peaked at. This stock peaked at about $200. Remember, this is a company that in 2018 and 2019 was making $28 and $29 billion respectively. We saw earnings really jump pretty high, and then came the pandemic, and in the following year we watched the profit drop pretty strongly down to about $14 billion profit attributable to shareholders. That's where I'm focused at. I'm used to seeing an EPS of about $12 per share for NCB over the years, and of course they've had huge one-off gains in those years back in 18 and 19 when the profits got up to $13 billion. They had about $5 billion in one-off gains. So I'd like to think of NCB's capability of being about a $25 billion company in terms of annual profits, and here it is, we see them doing $10.4 billion in the half year. So this may get up to $20 billion for the full year, attributable to shareholders, which is a EPS of about $8. So a little bit off from their typical high levels of EPS of $12, but that EPS was perhaps $10 on an adjusted basis again when you took out the one-off adjustment. So how do I feel about the stock? I think at earnings of $10 and an average market of about 14 times, I think the fair value for NCB is $140. So at 110, I still think they've got some room for growth. The other things that excite me are the fact that they've had huge impairment losses in the last 2 years, about $15 billion of impairment losses, credit loss adjustments because of the pandemic. And I think we could see those reversing as we come out of the pandemic. So there's $16 billion of potential upside income. I don't think those debts are bad. I think they just had to reserve them. And as we come throughout the pandemic, we could see that changing. So I'm excited about the fact that we see 77% growth in earnings. I think there's potentially a further 20% growth in earnings, and that's why I see the fair value of this stock at about $140. I think if we see those credit losses reversing in this next half of the year or in the later years as we come out of the pandemic, then we could see that stock price go a little bit further. But this is definitely the sleeping giant that's woken up and coming back strong. I really think they have great growth. It's hard to bet against NCB. It's a company that all of the big pension funds have, and if they're like me and they bought it early, the average price is perhaps $60, $70. So even at 110, although it's down for its peak of say 200, it's a stock that traded at $60, $70, $80 in the tens of billions of region. Next slide. Again, just shows what's been happening with the quarterly performance. So again, huge turnaround, $7.8 billion in this quarter. We're looking like what they used to be before the pandemic when they typically did $7, $8 billion per quarter, and that was not unusual. So let's hope that that trend continues. And if it does, we'll definitely see the stock price getting back to $140 sometime soon. Next slide shows how the stock price is traded. And again, it's just sort of traded down generally throughout the last 2 years of the pandemic. We're showing it here with a high of 147 in the last 2 years, now down to about 110 with a low of 108. But again, folks, this is a stock that ended 2019 at $200, ended 2019 $145, and has traded above $120, $130 on a regular. So I really do expect to see the stock price inching back up to $140. Like I said, it's hard to bet against the largest bank in Jamaica, NCB. It's great to see the results coming back, and I certainly expect this to continue. Look forward to the next quarter to see if they'll be able to have another $7 billion quarter. I think it's possible again because of the credit losses, which I expect to see reversing. They also had some large fair value losses that went through OCI, and I think we're going to see those things reversing. I don't think the increase in interest rates will impact them negatively. In fact, we may see them adjusting interest rates and increasing their spread going forward. So definitely look forward to this one. I think they have great potential to grow that stock price and to grow the EPS. Percival, what do you think?
Totally agree with your analysis, Dan. As you said, NCB would have suffered significant losses during the COVID period. Certainly one of my favorite stocks pre-COVID and even now. I know that the market sentiments for NCB has not been so great over the last 2 years or so, primarily because of the modernization and the digitization drive that the company has undertaken. They have gone digital for a lot of their branches. A lot of people have been laid off, but the technological advancements that the company has made over the last year to 2 years has required a lot of upfront costs and expenses, which of course the company will recuperate over the coming years. So with the digitization that they have undergone, we do know that this will actually, in the long run, improve and increase their profits. Still some negative market sentiments because the company has not been paying dividends, but we know that once they go back to paying their dividends, which is pretty healthy, then the market will take up back to the stock. So not a stock that you should be running to sell at this time, especially if you bought it pre-COVID, because the loss that you'll be suffering will be far too great. But a stock you should hold, and a stock that if it is you're looking to invest in the medium to long term, one that you should be buying at a time like this.
Well, thanks, PJ. Really appreciate that. As promised, Percival will now bring you some investment advice from our special segment. Welcome, PJ. What do you have for us?
So my investor tip for today is create an investment plan and stick to it. The temptation will arise as an investor to make impromptu decisions, sometimes based on changes in the market or just an emotional change. What I do know is that the market generally corrects itself over time, even when there are changes. So slow and steady wins the race. You want to ensure that you create a plan, stick to that plan, even when there are others who might be running to make adjustments to their portfolio. If it does not fit with the original plan that you make, don't rush to make any decisions.
Thanks for that, PJ. Great sound advice. This business of investing should not be an emotional one. I agree with you 100%. Well, folks, short and sweet. That's the way we're keeping it today. To our viewers, it's always a pleasure having you tune into our weekly investor updates. I'd also like to thank my fellow panelist, PJ, for his insightful contribution to today's discussions. Thanks again, PJ.
You're welcome, Dan.
We urge our viewers to follow us on social media. And if you're curious to know when our next virtual investor forum will be back, then social media is the place to find out. Of course, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. And thanks again for tuning in. Keep safe, everyone. And remember, wise investors, slow and steady wins the race. Bye-bye.